Well, both Target and Home Depot reported better than expected second quarter profits this morning. Does this indicate that we're starting to see a turnaround in retail? Well, joining us with answers, Tom Chin, Director of Analytics for Telsey Advisory Group, which is one of the country's leading research and consulting firms on the consumer sector. We're seeing all these headlines cross from the conference call at Target right now saying the recovery seems to have stalled in the second quarter. The street seems to like the numbers today, but when you hear something like that from management, that causes you to worry.
Yeah, absolutely. And I think, again, part of what we're seeing in terms of Target as well as Home Depot, a lot of the companies are still managing the expenses very well. Whether it's product costs, whether it's labor or marketing or even real estate, a lot of those gains or a lot of those meets or beats are really based on expense management. And so we're still seeing very challenging top line impacts in terms of negative, mid-single digits to, kind of high single digit negative comp store sales. So it's still very challenging for the consumer. And we don't see that kind of changing really anytime soon.
Saks' management saying on their conference call, people, when they are buying, they're still sticking to the sale racks. But the bottom line, I mean, the theme seems to be people aren't buying. It's just a matter of cutting payroll, cutting expenses. So why is this being viewed as things getting better?
Well, I think there's stabilization. So clearly since what we saw in the first quarter when, or really going back to the fourth quarter of last year when there were huge promotional activities happening, we're not seeing that as much now. And I think because we're seeing a little bit more stabilization where the brakes are really put on kind of over the last couple of months, we're seeing more traffic. We're obviously in the summer months with kids out of school, but we still have very challenging macro headwinds in terms of unemployment, in terms of housing still. And so all those things are impacting the consumer, and we don't see that changing in terms of the top line, but clearly from the bottom line perspective, people are managing their business as best as they can.
When you say things are stabilizing, you're also talking about the price cuts. Basically, things aren't going to continue to get cheaper?
Probably not to the magnitude that we saw when people had to drive, traffic to the stores. Companies have been managing inventory much better. So in some sense, there may be a little bit of a cap in terms of what people are expecting for sales because, people have kind of decreased inventories by 15-20%. But again, they're managing that business so that they don't have to mark down the inventory as heavily as they did in the fourth quarter of last year.
We are staring down back to school season right now, and that's going to be so key for indicating what to expect out of the Christmas season, the fourth quarter. It's make it or break it for stores. What are you seeing when you head to malls right now, and how does that differ from what management's indicating? Well,
it's similar to what they're saying to a certain extent. I think what we're seeing in terms of the different factors that are impacting back to school, I think it's a confluence of different things. First, obviously, the macroeconomic environment is very poor. You've seen teen unemployment be 24% versus 24% versus 18% this time last year. So the teens aren't spending, their parents aren't spending. So there's macro headwinds clear that are challenging the consumer. In addition to that, you're not seeing really kind of that new product flow. And there's really no sustainable trend out there. You're seeing some plaid merchandise. Obviously, jeans work very well in this environment in terms of back to school, but there's no discernible trend out there right now. So that's also causing some of the factors that are leading to kind of more depressed sales. And then lastly, really some structural things. So you've got less, tax-free holiday sales days, 58 last year versus 52.
Because the states can't afford them, right? They can't afford to do tax-free.
And so there's not as many kind of those days. You're seeing kind of the stimulus checks. Again, we saw $600, $1,200 last year between May and July. Some of that spilt over to this year where you're not seeing that immediate benefit. So all those things are playing into the fact that back to school is very challenging right now.
I thought it was interesting last week to see Abercrombie Fitch, which had staked out that territory, saying we are not going to cut prices, and now they are.
They've lowered
the hand has really been forced.
I think, and again, it's a byproduct of what's happening in the environment. To your point before, whenever we go to the stores and we go across the stores and visit 300 different stores every month, and we see all the traffic surrounding the promotional activity when there's an event like a Nordstrom anniversary sale or when there's a deep promotional discounting happening, that's where the traffic is.
All right. Thank you so much, Tom Chin
Thank you.
from Telsey Advisory.